Hi, welcome back to the Mortgages AF podcast and to our first Minisode, where we'll go through what the mortgage market actually looks like. And I should say that we're not recommending these products are fit for everyone, and you should always speak to a qualified broker before you do anything to get proper advice. So I'm joined, as always, by Stuart.
Hello.
And we're going to both pick a product of the week to talk about. So these are products that were available this week. Obviously, if you're listening to in the future, they might not still be available. They might have changed. Things change constantly, but it should give people an idea of what the mortgage market kind of looks like at the moment. And if you want to make sure you get this every week, you need to hit subscribe on whatever platform you're watching or listening to this podcast on. So if you're on YouTube, subscribe, or Apple Podcasts or whatever, then make sure you hit subscribe so you can catch these every week. Okay. So, Stuart, I think I'll let you go first, if that's okay.
Yeah, no problems. So I think my products of the week, I think it's probably going to be tracker mortgage rates. We've talked a lot about over the last couple of months about rates flying through the roof. We've seen rates starting to reduce over the last few weeks. And this morning, probably in fact less than an hour ago, there's a mainstream building society, a mainstream bank, offering tracker rates, 2-year tracker rates at 3.54 and 3.55%, which I think is a great place to be for those who want to use those.
Yeah. So, in case the people that are watching or listening don't know what a tracker rate is, can you just give them a quick highlight of what a tracker rate does, how it works?
I can. A tracker rate is, I suppose you describe it as a type of variable rate. But the difference being, the variable rate from a lender is set by the lender, so they can choose what the variable rate is. With a tracker mortgage, it's linked to the Bank of England base rate, which at the moment is 3%. So a building society at the moment is only adding 0.54% to the base rate, which is quite attractive at the moment for where we're at. The one thing people do have to realise is that a tracker rate can change, as can a variable rate. So it's not a fixed rate. It is something that can change. However, there's people at the moment who are looking at these as a bit of an interim thing. The other difference with a tracker rate is that generally there's no penalties for coming out of that type of product.
Yeah.
So for some and the right people, it's a good product.
Yeah, just to pick on that point that you just made there, tracker rates, it's kind of like 50-50, isn't it? So, well, not 50-50, it's probably a different percentage to that, but some of them, or a lot of them, don't have early repayment charges, but there are some that do, so you need to be careful when you're taking them out that that if that's what you're looking for, don't assume that a tracker rate doesn't have early repayment charges.
Correct.
Cool. Okay, fantastic. Well, that's really good. I think tracker rates are quite appealing to a lot of people at the moment, especially because I was reading an article this week where they were saying that the base rate's going to peak at 4.5% now is the prediction. So obviously going 0.54 over 4.5%, you're looking at 5.04. So that's actually quite appealing now to a lot of people. Obviously, the problem is there is a massive element of risk there, and you shouldn't just assume that things are going to go your way with a tracker rate. Cool. Did you have anything else you wanted to add about the tracker rates, or should we move on?
No, I think that's good enough.
Cool. Okay. So I have picked a fixed rate. I've actually picked two. I've been greedy. Sorry. So I've picked two products that I wanted to talk about. So it's worth noting that the product you were talking about then is a residential product, right? So it's not for buy-to-lets, that's for residential mortgages. So I've picked. I'll go through the first one. So the first one that I've picked is a residential product as well, and it's a 5-year fixed product, and it's 4.84%. Now that at the moment is actually really good. If I'd said that probably 2 months ago, people would be like, what? That sounds awful. But nowadays, 4.84% sounds pretty good. So it's a 5-year fixed. It's got a free valuation. It's got portability option as well. It is maximum 65% LTV, so you're not probably talking many first-time buyers that are going to have a deposit of that size. You're probably looking at people that are moving house and have got a decent sized deposit. There's no cash back on it, but actually the true cost of the product was really, really good, and it's really refreshing to see that lenders are actually bringing those products down. And obviously, it was actually from one of the smaller building societies, so it's not even a mainstream high street lender that's offering that at the moment. So there's certainly good products out there. I said at the beginning, you need to speak to a broker. Don't go out and just try and find this product because it might not be for you. We're intentionally not telling you the names of the lenders because we don't want you to go looking for these products, assuming they are the best fit for you. That is intentional, but you should always get advice around your mortgage. But yeah, so I mean that's a fixed rate product. So unlike the tracker, it's just going to be the same all the way through for the 5 years. So you know what your monthly commitment is going to be. That's usually preferable for most first time buyers and most homeowners, I think, in general. So looking at having the same monthly payment all the way through.
Mark, just quickly on that, and because I know you talk about the loan to value, probably be a home mover, but
Yeah.
also I'm guessing I've not seen that product that you're talking about, but it's also good for a remortgage as well. I should imagine, is it?
I don't know if it's available on a remortgage. I didn't check. It's it was a I don't know. I didn't check if it was a remortgage product as well. It may well be available as a remortgage, or at the very least, I imagine there's a similar product for a remortgage. So yes, not all products are available for both home mover and remortgage. Some are just for remortgage. So it's yeah, I couldn't guarantee it, but yeah, you'd imagine that would be available for remortgage as well. And I know there are some great retention products as well out there. But yeah, so that was my first product I wanted to talk about. I think it's showing that we're seeing a definite downward trend. I think probably a month ago we were looking at 6% plus on interest rates, and it's great to see that they're coming down a bit, at least. Maybe not hugely, but they're coming down a bit. That's the main thing. Right, the second product I wanted to talk to you about, Stuart, was it was actually a limited company buy to let, and I thought often when we're doing anything like this, when we're talking to people about mortgages and we're talking on the podcast and stuff like that, we're talking about residential mortgages, and I wanted to just throw something in here for the landlords. So it's a 5.44% limited company buy-to-let product. Now, limited company buy-to-let products are always, well, I can't say always, they are usually higher interest rate than a residential product, and they're usually a higher interest rate than a buy-to-let in a personal name. But this is a limited company buy-to-let product, and it's 5.44% for 5-year fixed, which is actually very good at the moment in the world of limited company buy-to-lets, at least. The thing to mention with it is there's a variable valuation fee. So the valuation fee depends on the price of the property. But the biggest thing to mention about it is the product fee. And so with a residential mortgage, the product fee is usually a set amount, right? So it'll be 995 or maybe 1495 or 999 or something like that. With a limited company buy to let, they're quite often a percentage of the value of the property. So in this case, the product fee is 4%, which could be quite a lot of money potentially for the for the landlord. So it goes to show the attitude towards limited company buy-to-lets has changed slightly. You're not seeing those great deals where they have a fixed product fee as often, and these variable product fees are coming in.
Yeah, we're seeing more and more of that now, aren't we?
Yeah, I think so, and I think that's probably where it's going to go. But yeah, that's another an idea. I didn't look at personal buy-to-let fees and rates this week, but they are slightly lower, I think. Yeah. So that's sort of like what I wanted to talk about on this minisode, and and sort of cover off the different rates that are around. In general, how are you finding the mortgage market, Stuart?
I think at the moment I'm really busy speaking with people. a lot. And as busy as I've ever been, people just a little bit more hesitant at the moment. I think people are just coming to grips with where the market is and where it's reduced a little bit now. But yeah, interest is still there, and I think moving forward, I think we'll be back on a level kill again. I don't know about yourself.
Yeah, I completely agree. I think interest rates are coming down. Yeah, they're not coming down to where they were, but
Yeah,
they've come down a lot with the stability of the government coming in. So
yeah,
we're seeing a lot more lender choice, a lot more lender product choice. So lenders have come back in a big way, and they've ramped up what they're offering. They've got a bigger product range now. There was a time briefly a couple of months ago when the amount of products available went from something like 3,000 down to 2,000 or something like that. And we're getting back up to where the product level should be.
yeah,
Uh, the other thing to mention is lenders seem to be incredibly busy,
yeah,
and we're still seeing this. I was looking at an application I'd done for a client this morning, and the turnaround time on it was 2 weeks before getting an initial assessment done, and that was a mainstream lender. So that's like shows how busy they are. So people are still buying. We're
yeah,
still seeing people buying and remortgaging. So it's not just us that are busy; it is the market in general, which is busy, which is great.
yeah, yeah.
Yeah, well, that's pretty much it. Unless, did you have anything else you wanted to talk about? Anything in the market you wanted to?
I don't think I think we're in a good place. I think at the moment, and yeah, looking forward to see what happens in this next week and where we're at when we catch up next Friday.
Yeah, that would be really good. Okay, well, as I said at the beginning, don't forget to hit subscribe on whatever platform that you're listening to or watching this on, because we are going to aim to do, I'm not going to promise, but we're going to aim to try and do this every Friday and just give you guys a bit of an update on the mortgage market so you can get an idea. I think I will try and probably mention a landlord product as well once a week, and just to give everybody a, an update. But yeah, thanks for joining us,
Yeah.
and we'll see you next week, hopefully.
See you
Cheers.
next week. Take care.
Bye bye.
Bye.